Yes, I was looking last week. So our Robinhood Investor Index shows us consistently over time that our customers buy the dip and trim winners equally. I would say they've been doing a little more selectively. That being said, when I looked over more recent data, there's also been some just adding broadly to index ETFs. So they pretty much consistently do it, and this is no different.
We're so close to the average. Lou Wang on the BN side puts together strategist forecast for the year end. Out of 20, the average is 54.69. So we're just 10 points away from that. And I feel like strategists have to keep playing catch up as this market climbs over the last couple of years, right?
Yeah.
Even with last week's drop, do we have a lot more room to run?
I think towards the end of the year, yes. So I have a call of around 5,800, and I actually still think we can get there. But I also thought that we would have a pullback sometime in the August-September period. Consistently, I think about the last 2 decades I've been in the market, and the week after Labor Day is always weak. And so it's not surprising to me to have this, and then you have an environment where valuations are elevated. So I just think we're going to be in this kind of recycling, anxiety-driven market, because we're also heading into an election cycle, and there's just there's a lot of things to be nervous about, but I think we'll still get there.
A lot of that anxiety is predicated on the labor market. And you had Andrew Hollenhorst over at Citigroup speaking to Tom Keene this morning for Bloomberg Radio Surveillance that the unemployment rate can kind of quickly barrel towards 5%. You can easily see a path there. What would it take for you to get more nervous about this market, given where we stand in the labor market? You could see it two ways, can't you? There are plenty of people out there that say this is a healthy participation, but do you see a further weakening that would change your view?
Yeah, I have kind of for the last few months have said if we get to a 4.5% unemployment rate, I'm going to start getting a little bit more nervous and cautious. We're not quite there, and we just saw it dip back down to 4.2 from 4.3. So I do think it's because of increased participation, and you're also just seeing I think a normalizing of the labor markets. I just don't think it's something to be nervous about yet. It's just not as hot as it was, and we got used to it being hot.
I want to go back to what you were saying about stock picking in this market versus buying indexes, those more passive vehicles, because you have a really unique view on the retail trader. We talk to a lot of people who manage a lot of money for more professional types, but when it comes to the self-directed trader, I mean, what is the rough breakdown, if you have a sense of how much stock picking they're doing versus we're going to go in the S&P 500, the NASDAQ 100?
I don't have specific percentages, but I can tell you that up until I'd say the pullback that we had at the end of July, early August, it was almost exclusively stock picking. And the things that we've been seeing all year, like in semiconductors, things like NVIDIA, but then also in various EV stocks in and out. And when Apple wasn't doing well, buying more of that. But in more recent times when we have had big dips, there has been more use of broad-based ETFs. And in fact, some inverse ETFs have been used. And actually, that I saw some unwinding more recently.
Fascinating. What about options market? We've been talking about how much options volume has really been driving a lot of the overall flow. And we've also been hearing from a lot of our interviewees lately that you see a lot of people running for protection. Are you seeing the retail trader do the same thing?
I think on the margin, but not any more than I think we've seen in the past. I don't think there's been a huge increase in that. And I know there's been bouts of that. When you look at the put-call ratios and when vol spikes, you do tend to see a higher number. But I don't think that we've seen as much of an increase in it as other places.
How excited are you for Tuesday night? I feel like the debate could be more important than CPI. Is that possible?
I think so. I mean, at least it comes before, right? So you can watch the debate
is done,
and move on.
right? It's not a concern anymore.
I think it's not. You had Invitation Homes on Friday saying that rental rates are going to come down. You've seen commodity prices drop quite a bit. So I don't know if it's done, but I think it's definitely trending in the direction, and we get to look at the labor market now way more than we did before.
Well, you also see that in trading. It feels like there's more trading around more of these jobs prints, not just NFP, but of course, initial jobless claims, NFP, JOLTS, et cetera. That has really sort of replaced inflation as the focus of these markets, as the focus of the Fed. Do you think that's a bit premature? Should we be paying more attention to inflation?
I still think you have to think about it because there are aspects to inflation that I think could be treacherous. Like if you look at shipping costs, like they've gone up a lot. And so when that could actually end up impacting goods, but goods demand has been lower. So then it ends up being maybe a wash in that perspective. So I don't think you can ever not look at inflation. I just don't think it's as much of an issue as it used to be.
My question too, I think we've been asking this a lot, is this a trader's market or an investor's market? Because when you listen to both presidential candidates, how much more does inflation become an issue going into 2025 when you take that little bit longer of a time horizon?
Yeah, well, to answer the first part of the question, I think it's both. Like, I think, you can always, it's always an investor's market because if you have a longer time horizon, you should just be investing. But for a trader's market, the fact that we've had vol spikes, that actually helps a trader quite a bit if you can play it and manage your risk properly. I think inflation from a kind of election perspective, that will continue to be there because it's affected all of us, to our everyday lives. So it's going to continue to be something that gets talked about. And it will take a little while to feel better, I think, for the average person.
A long while.
Yeah.
I mean, the fact is, unless we get into deflation, we're going to have prices at a level that make us feel uncomfortable until wages catch up.
And
right?
wages have actually started to catch up. If you look
You were
at
listening to David Gurr's Janet Yellen interview, weren't you?
I mean, I don't think, I think it's natural for investors and traders to be nervous when things are going the way they should. I just think the market does better in extremes.
Okay, if it's a trader's market,
Yeah.
I have to admit, we've been talking about how I'm going to try to gamble on football for the first time. Did it yesterday, $10 wager on a $400 outcome, didn't win any money, lost my $20, in fact. But what do you do with this market? Do you find people, frankly, gambling in this market as well? Do you find them, betting on outcomes through highly levered ETFs, as Katie has been pointing out throughout the show?
Following closely, you can say.
I think it's a mix. I think what we've seen actually is that people have core positions that they believe in for the long term, and then they trade around them. And I don't think there's anything wrong with that. You actually have a lot of professional portfolio managers that do the same thing, that trade on the volatility, and that's what we've seen in our.
I mean,
enticing.
with Bitcoin still at $55,000, I think a lot of those people are placing bets.
Well,
right?
actually, quick question on Bitcoin.
Yeah.
I mean, are you still seeing that enthusiasm for Bitcoin? Because it's been trading around $60,000.
ETF outflows.
Yeah,
Significant
outflows,
ones.
but the actual price itself, it really hasn't budged that much since the end of February, if you take a wide, generous
Right.
band.
I mean, it's been more of a place to trade, I guess, and versus invest long term if you look at the near term price movement. But I just think that there's this dedicated faction of people and investors that believe in Bitcoin, and every time there is, or any sort of coin, and there is a underlying belief that there is something wrong with the way fiat money works today, and it is built on debt. And as you have a deficit that grows, and neither party that seems to want to fix it.